All right, folks, what we're now going to do is make an assessment of whether or not a particular fund is a major fund or not. And remember, we have two tests, the 10% and the 5%, and you got to pass both in order to be a major fund. So let's go over the fundamental rules and make sure that you're comfortable so that you can answer any question that appears on your exam. All right, fund financial statements are presented for specific named major funds. Determination of a major fund involves the application of specific quantitative criteria to major financial statement line items. Funds are reported by name if they are major. Funds must meet the 10% and a 5% test for any one of the major financial statement classifications. And that would include assets, liabilities, revenues, expenditures, expenses. So when it comes to the 10% test, and that's what we're going to start with, the 10% test threshold of criteria measures the fund status within its own category. So it's, say, the governmental funds. And then you have a 5% threshold, and that is measured within the combined values of both categories to be considered. And you have to pass both. Management may exercise judgment to add additional funds, and regardless of how the numbers come out, the general fund is always a major fund. Let me repeat that. The general fund is always a major fund. The rules seem arbitrary, but they are designed to get a good representation of funds. Generally, we would anticipate that the enterprise fund would have more assets than their governmental counterparts, since non-current assets are accumulated over a longer period. Thus, the enterprise fund will likely easily meet both criteria. Meanwhile, governmental funds, particularly in periods of new construction, will likely have vastly greater expenditures than their enterprise counterparts, since assets are treated as a period cost in the year in which they occur. Governmental funds would meet the criteria for major fund presentation based on their expenditures in those years. So let's go on and take a look at something here. Consider a government that computes the quantitative criteria for major fund determination using revenue. Ignoring raw data, we have percentages available for each of its funds and have displayed them in a horizontal chart. The sales tax special revenue fund, the city hall bond debt service, the city hall construction, all meet the first criteria of a major fund determination because they exceed 10% of the governmental funds. So in this particular case, we would say, all right, we have those that have met it. Also, the water and sewer and landfill enterprise fund both satisfy the first criteria in this particular case because they also exceed the 10% within their category. By the way, even though the general fund doesn't seem to meet that criteria, what did we say? The general fund is always considered a major fund. Then we move on and we say the final determination is the 5% test. The 5% compares the individual funds to the combined value of the selected line items for both governmental and enterprise. Revenues in excess of 5% of the contributed or combined total qualify the fund as a major fund. Under the second criteria, the City Hall Debt Service Fund, Construction Capital Projects Fund, and Water Sewer Fund and Landfill all meet the 5% test, as you can see. Therefore, the funds meeting both, and I emphasize the word both, of the quantitative criteria, the 10 and the 5, are the City Hall Bond Debt Service, the City Hall Construction Capital Projects, the Water and Sewer, and the Landfill. The Sales Tax Fund met the 10% test but failed the 5% test. It only had 4% according to the statistics. By the way, even though the general fund failed, it is always a major fund despite the failure. So that's how these funds all are determined for the criteria of major fund classification. Hope that helps, and now you're ready to try a problem.